All right, Mark, we're going to start by talking about inflation by way of crude oil prices. They are up. Energy company stocks continue to gain along with the oil prices. OPEC is, of course, predicting strong demand in 2021 and agreed to ease production cuts and boost output. So my question to you, is this a sign of kind of a long-standing economic recovery, or is it about inflation and just kind of higher prices sticking around for the long haul?
Sure. I think it's part of the ebb and flow. So coming right out of this recovery, we're probably at the strongest point of growth right now, and we're making our way through that into the summer. But what high prices does, and high commodity prices does, is create kind of this growth drag or growth tax when you look out 3 to 6 months. In other words, costs are higher, so maybe there's a little bit of slowdown coming as well. So typically, what causes prices to come down for commodities is high prices. So it's almost a self-reinforcing cycle, and that's why you see the ebbs and flows in commodities. But I think we've really normalized, and economic growth is getting back online to a more normal level.
All right. Yeah. I mean, this is the first time it's been over $70 a barrel in like 2 years. Mark, we should have bought oil like last year when they were selling people, right? They wanted people just to buy it. They were giving it away for free.
Yes. Someone to take oil off their hands, off the ship.
Exactly. All right. So now let's move on to our next question here. We're going to talk about cyber attacks because, of course, last week we were talking about the Colonial Pipeline, and that had a cyber attack. They had to pay out $4.4 million. This week we're talking about JBS Meats. They're finally going to get their producers back online. We don't know if they paid anywhere for that ransomware attack, but I was so surprised to hear about these numbers. Essentially, ransomware attacks are up 300% in the past year. Companies paid $350 million in 2020. So, Mark, I feel like this is almost a good example of crime does pay sometimes. But what worries me is whether or not we should be concerned about whether cyber attackers would ever target the stock market.
Oh, sure. It's a real concern in terms of shutting down the system. So the stock market has been aware of this issue, as have the other industry groups. So my own profession, the Chartered Financial Analysts Institute, the CFA Institute, are very well aware of these risks, and we take it into account when we're building and constructing portfolios, in the sense that we're not basing our decisions on what can happen necessarily tomorrow. We're really building it, what can happen, can your portfolio withstand a shutdown tomorrow if that was necessary? And you don't have to trade when the markets move, and that's where sound portfolio construction and a well-researched portfolio can really come in handy to get you through all the different challenges that the market can face. And it wasn't it was a while ago, but it doesn't seem like a while ago to me, when the market has shut down from time to time. And after the September 11th attacks, the market did shut down for the remainder of the week. In other words, and long-term investors were fine ultimately as you go through those ebbs and flows, but that was really a moment of uncertainty. And there's been a variety of moments of uncertainty throughout market history, going all the way back to World War I and into World War II, and how markets are going to digest the news. And how it's going to respond and stay open. So it is one of those risks, and that's why we think that short-term trading is an added risk in this environment. If you're just trying to trade something on any given second, well, what if the market just has a quirk to it, or a cyber attack, for example? But it doesn't change the underlying value of assets. Just like last year when we had the market drop extremely fast in March of last year, that wasn't necessarily real prices. That was the price of liquidity when there was very little liquidity. And so you had the shutdown of the economy, essentially. And so you had a lot of selling hit the market, but the market and asset prices ultimately responded back to their more normalized levels.
All right. Yeah, that was interesting, too, to see also the government number one on that list there,
Sure.
And then the last question, Mark, because I always like to end on these kind of fun ones. I'm not on that Reddit train yet with the meme trading.
Sure.
It was GameStop. Now we're talking about AMC. If you look at the graph here, it's just, again, nuts to look at how it's climbed. So tell me about, again, meme trading. Are you keeping an eye on it? Should I be buying AMC?
We are looking at it just because it has an effect on the overall market and our overall volume. So the volume of trading in AMC stock is twice the amount of trading in Apple stock, which is a $2 trillion company, and AMC today is a $30 billion company based on the valuation. But if you were to do a regression on what the normalized valuation for an AMC would be, it would be about $2 billion. So this is clearly the speculative component in AMC, and what we say or what you're referring to is the meme stock, where it kind of catches a certain dynamic in the marketplace, just these small corners of the market. But the other component that I think is interesting is that the company side of this. So AMC is a real company, just like GameStop or any of these others. Yeah. And what can they do with an elevated stock price? Well, they can issue shares and raise money, and that's just what they're doing. And what does that mean? Well, that actually saves jobs. That gives them enough financing to rebuild their business, pay off any debt they have. So it's actually really interesting where individual investors may be able to save certain companies or allow them to restructure appropriately. And that's kind of a new dynamic in the marketplace, and maybe beloved companies or companies that we really see that might not survive, be able to survive by the funding of the capital markets.
Right. Especially because the theaters took such a hit during the pandemic. So it is nice to see them get that little boost.
Definitely.
Or big boost in this case. All right. Mark, thank you very much.
Great. Thanks, Erin.